Awesome. Welcome, everybody. My name is Matt Walsh. I am the co-founder of Castle Island Ventures. We're an early stage fund focused on blockchain infrastructure companies. This is actually my third time at this event, which is always one of my favorite events of the year. I'm very happy to be speaking with Michael Gronager, the co-founder and CEO of Chainalysis, one of the most important companies in the crypto industry. Michael, it's great to see you.
Likewise, it's always a great pleasure to talk at this event. It was fun last year as well. So thanks for setting this up also.
So, Michael, you are a veteran of the industry. You go way back. What has this year been like for you? This has just been an unprecedented year in the crypto industry. What's it like to operate?
Wow, it's been an interesting year to operate for sure. I would say that. I think that one of my biggest takeaways has been like in the past, I always thought about crypto bear markets and crypto bull runs. And I thought about like the seasonality of crypto and how this is a very unique asset class and how it behaved in its kind of own different ways and so on. And I think one of my takeaways from over the last year has basically been that crypto has matured into becoming like an asset like it's very similar to a lot of the tech stocks. So if you look at how crypto has performed over the last year, take Ethereum and Bitcoin, they basically followed like any other tech stock. They basically followed the Nasdaq index pretty well. And remember, one of the interesting things with top 500 companies and the Nasdaq index and so on, they actually pulled up a lot by the big companies like the Googles, the Apples, the Microsofts, and so on. And crypto is performing more like the bigger companies in that space than the smaller ones that actually been hurt more by the crisis and by the increasing interest rates and so on. So crypto is a kind of a pretty good asset that way. And you then look at like just what happened this year, you would say it's actually one of the assets that has like grown most. If you look at companies in the space that's publicly traded, Coinbase is up from the beginning of the year quite a lot actually. So I would say that like many of these like metrics that's very objective are actually kind of healthy if you look at the ecosystem. But then at the same time, it's no lie that a lot of other things has happened in crypto, right? We saw the impact of the interest rate that happened roughly a year ago now, going up, was that like some of the more leveraged and exposed companies in the space to leverage and to high risk, they some went bankrupt, some the other things basically, but a lot of them they lost a lot of money. And the realized losses a year ago in the beginning of the year was around $50 billion, and around FTX that everyone remembers was around $10 billion. So even though we all remember FTX, that was actually seen from analytics point of view a smaller event in terms of impact. But again, at the same time, what also changed is a lot of the hype has gone out of crypto like recently. So we are not all expecting to get rich from launching the next NFT. We had a lot of other things we don't expect in the crypto space happens there. So a lot of people are back into building all the hard stuff, and I think that's actually a good transformation.
I totally agree. I think this is the time for builders. I mean, it has to be particularly frustrating for you to just see all of these frauds and scams that have happened over the past year and know that the tools to actually see some of this stuff, we really had them at our disposal, right? So you guys have been pioneers in on-chain data and just tracking flow of funds. And, if folks were more on top of that, maybe some of these things wouldn't have happened. So do you think it's a wake-up call for the industry in some ways?
I think it's a wake up call. I also think that like one of the things that I really see as a key value proposition of crypto is that this is a financial ecosystem of unprecedented transparency. And I think that goes in many directions. So first of all, just realizing that all the possibilities that are actually there, that will enable, I would say, in many ways, de-risking, like enabling understanding counterparty risk. Some of that has been done by industry players that actually were more foresighted and looked at like what are actually the risk of my counterparties, and they got hurt less. But it was not like something that everyone did at that time. And at the same time, in terms of like other things you could measure in crypto, anything of criminal activity and other things, that's clearly also something that's super transparent and can help de-risk businesses. I also think to that end, when you look at the transparency of crypto, and if I talk to basically any random person on the street and say crypto, they would do the letter rhyme and say crime afterwards, right? And basically say that's the other side of crypto. And I would say that like yes, but it's probably more like a white car gets more dirty than any other colors. That's only because it's white. It's not because that the rest of the cars are not more dirty. It's just because you can see it and it's clear. And I think a lot of that is actually one of the really good benefits of crypto is like the transparency space.
And you guys do a tremendous amount of work in that space. So maybe talk a little bit about some of the high profile cases that you've been involved in over the past year and some of the real discoveries that you've made.
Yes, I think that like if you look at some of the high profile cases, I'd probably start with something that happened roughly a year ago. We had a hack of infrastructure in crypto. There's a concept in DeFi called bridges that's basically enabling bridging between different blockchain assets and different blockchain and enabling transfer between those. That also means that now you have a bunch of value sitting kind of in some kind of automated infrastructure online, I would say like on the internet or on the blockchain, depending on how you look at it. And that was relatively new infrastructure a year ago. And it also meant that there would be security flaws and security breaches possible. And we saw different hacks being used and exploited that way. One of them being the Ronin hack. And I think the Ronin hack was interesting because it was actually Infinity's bridge between their local currency and Ethereum. And suddenly someone managed to steal like 600 million worth of cryptocurrency in one hack. That's a huge theft. The great news about that is that we managed to recoup 10% of that, just working with all our exchange partners around the globe and the law enforcement, and freeze those funds and be able to send them back to Axie Infinity. And at the same time, which is great as well, is that the majority of those funds are now sitting basic like lame ducks on the blockchain. They can't really move because there's no one who really knows how to launder the funds anymore, because there's a knowledge that like there's oversight of this. And as soon as you move the funds, we'll know where they go. So I think that like that's been a deterrent and something that definitely helped. And that's like a good example of a very big case that has happened in the more recent times.
Yeah, you mentioned these funds being kind of trapped. And, I remember when privacy coins were the big narrative of this industry and how we were going to have this advancement of layer one blockchains with native privacy. And, it hasn't really gone that way. I mean, how do you think that space will evolve?
Yeah, so I remember when I was raising funds for Chainalysis like 8-10 years ago or so, like basically trying to sell this idea of crypto. Some would be like quite skeptical and say like, yeah, like you can't only do this for a short amount of time, and everyone would be like, build better better privacy coins, and you can't really, it's all going anonymous. That's a key value proposition of crypto. And I was like, I actually think the key value proposition of crypto is different. I think the key value proposition is enabling financial instruments that people would otherwise not have access to, and enable people to get access to finance that would otherwise not have access. And then I think there's one of the other things that's actually key to crypto is that these other two things are only possible because of the transparency in the space. And the entire process of like every time I send someone a transaction in Bitcoin 10 years ago, the first thing is that you both look at the block explorer to figure out whether it happened. That's transparency. That's how you build trust. So my thesis were that if privacy or maybe just pure anonymity was really a value proposition of crypto, we would see the growth of privacy coin and their market cap outgrowing the rest. But if you think that the financial opportunities in the space were actually more important and the value driver of the space, you would see cryptocurrencies like Ethereum, which is actually admittedly less private than, for example, Bitcoin, and you would see that one growing. And I was right. It was like basically what we saw and see year over year is like the growth of Solana, the growth of Ethereum, the growth of Polygon. It's just like out surpassing the growth of any of the privacy protocols. So it basically say people put their word where they put their money where their mouth is. Maybe not always. They definitely put their money where their heart is. I think that's more truth, and not necessarily their mouth where their heart is. So I think that like people will be very vocal about features that they might not want to pay for, and I think that that's one of the examples of anonymity in crypto. So that's how I've seen it's gone over the last at least 10 years.
I guess it's network effects too, right? There's just not enough liquidity on some of these things that if all of the developers are building on Ethereum or Solana or Bitcoin, it's unlikely that you'll see the mass adoption of a native L1 that is just privacy featured.
I think so, and you can launch it later, and then it's up to the question like whether again people would actually prioritize using it or not. And I think that we haven't really seen those prioritization. CCAS is a good example where the vast majority of all transactions are actually non-shielded, and that's despite that you can trivially just transact in a completely shielded way as well. So I do think that like I'm still somewhat skeptic that that's actually a use case. I would also say to that like there's for me a difference between anonymity and privacy. And I usually say that like privacy means that your neighbor doesn't know what you're doing. And anonymity means that no one knows what you're doing. And the neighbor is kind of in an abstract sense. So like I don't like a financial system where I trivially can look up your salary and everything you bought yesterday. I don't think that's gaining trust in a system. And that's like breaking my rules of privacy. But at the same time, if you have a system that doesn't enable oversight and transparency from, for example, regulators and, for example, trying to figure out whether something up to really, really bad things, well, then you create an anonymous system. And that's actually not something we ever had in the history of mankind. And I'm not sure that's something we need because some of the privacy features are actually enabled through institutions and have been enabled through institutions for a long time. And to be completely honest, that's still like the case. If I send money to a crypto exchange, you don't know whether it was my money anymore because they're mixed in one big pot. But someone knows and someone can be asked, but only if there's due process.
Switching gears a little bit, I look at this market, at least in the United States right now, and you just think about how much bigger this market would be if broker dealers and banks were really able to transact in this economy, if they were able to offer custody and trade execution and, Web3 enabled services to their customers. But, it's really not that they don't want to build these things, it's that the regulatory landscape is really not conducive to it right now. So how do you think about this post FTX world and some of the regulatory headwinds that we're facing in the US?
Yeah, I think that it is a complicated thing, right? I think like every regulator and politician that like informs regulators will of course think about consumer protection. And they would see that there were people who lost money on FTX and they're like, how can we fix this? And I think that like when I look at that and that space, I would say like it's actually been fixed before. It's not just been fixed everywhere. So Mt. Gox is another big exchange that got hacked and lost an awful lot of money. But it's like now 8-10 years ago or whatever. It's like a long time ago. And one of the reactions in one of the states in the US that were regulating crypto at that time and building out the bid license, New York, I mean, today, they basically said, like, we can fix this. We can create a regulatory framework where we can ensure that people have, like, there's proper processes in place, there's backing of the funds, and so on. Many companies in the crypto space in New York, or like all in New York, but many in general, are actually regulated by that. And the thing is, FTX were not, right? And if you think about regulation today in a global world and a global economy, you need to solve two problems. You need, number one, to attract interesting businesses to your jurisdiction. Because if they're not in your jurisdiction, you can't regulate them. And because people act globally today, they're going to go to another jurisdiction where they're not protected. So if you truly want to protect your citizens, you need to, number one, attract all the interesting business to your jurisdiction. And then number two, create a good regulatory framework that then protects the citizens and like the consumers. And I think that like the lesson is that framework kind of exists, but the failure was that it was not like globally deployed, like let's say bid license, or it was not like made in a way that made everyone want to go to New York and do business where it would have been possible, right? So I would say that's kind of the lesson there, and I think that's the challenge for regulators today. And then as you say, like, how can we get there? And like, what are all the businesses that would be able to do things if there are more regulatory clarity? I agree that like regulatory clarity is something that we want. The US is complicated in many ways because to pass new laws, especially in areas where there's some level of like challenge between sides, it's not a simple thing. And we'll probably not see any new regulation being passed anytime soon. In the US, more clarity can come from guidances. We have seen that from Treasury in the past. We could look towards that. And I think there'll be some inspiration to gather from, for example, Europe, where MiCA have been passed and is an interesting piece of regulation that actually creates a lot of clarity for the businesses operating out of Europe.
Ultimately, I guess as the co-founder and CEO of Chainalysis, you're in the capital allocation game in terms of allocating resources to these different products and geographies. So, I mean, how do you think about that in terms of where you want to invest in this business geographically, as well as the types of products you want to build over the next few years?
Yeah, so we have many business lines in Chainalysis, right, and many verticals we are serving, and admittedly, our biggest vertical today is the public sector. So we have like 200 public sector customers in around 50 countries in the world. It's a huge part of our revenue and a huge part of our focus, and I would say that is not really regulatory dependent of where that is happening. It's more like where are I would say the biggest effort being made in ensuring a safe financial system. US is pretty good at that actually. So I would say that's not where it's lacking. Europe is strong at that. It's definitely happening throughout Asia and so on. So we see that as being kind of a global thing. But then if I move forward and say like what's going on in, for example, our big space of crypto businesses and other financial institutions that counts like more than 1,000 customers today, well, I can clearly see that we see a growth of like businesses outside the US in that space today. And I would also say so that's like something that of course direct our focus. But there's also a little like comment on that one and like an addition to that. And that is actually if I look at the more traditional financial sector, the big traditional banks, they have received some level of clarity in the US over the last 2 years around like the ability to custody crypto. And we've actually seen that like our revenue from an interest from bigger financial institutions is more mature in the US than the rest of the world, simply because of like some of those regulatory clarities that didn't exist in Europe or elsewhere. And that's why, for example, a bank like Bank of New York are able to custody crypto today, and we are not seeing the same motion happening in Europe for many of the big banks there.
That's interesting. I mean, I think if you zoom out and you maybe advance this narrative 10 years, it'd be really hard to imagine a world where banks and broker dealers everywhere aren't transacting in cryptocurrencies, but maybe also securities on chain. I think this is a really interesting category where something like Chainalysis would be very pivotal and essential for an operation like that. So how do you think about maybe what's next in terms of what's after cryptocurrencies on blockchain enabled rails?
I love that question, right? And basically, so my obsession with crypto started like 12 years ago or so, 11, 12 years ago, and basically started looking at Bitcoin. And then I looked at like Bitcoin was based on the blockchain, and was really the core innovation there was basically digital scarcity. So that something, a digital object that you could only move but not copy. And that's the perfect representation of value. And I'm a physicist, so I'm going to use physicist-like arguments here. And I would say, just due to thermodynamics, then all value will go to the blockchain. That's kind of a law, because this is the more optimal state for value to be represented that way. And then thermodynamics sends it there. Like also, thermodynamics is not going to tell you when it's going to happen. It's just going to tell you that's the instant. So the speed is in, we don't know that. We just know that it'll be a push in that direction. And then when I look at like how is it going to evolve? Well, the internet did the same for information, because that represented information and like all of the stuff we are sending around in a much better way. And we saw that motion was like somewhat bumpy. Initially, we could only put disenfranchised content there, something that no one really owned, or at least no one really cared about claiming ownership of. And then basically the same in crypto. So basically, the cryptocurrencies we see today are things that are inherently based in crypto, so like Bitcoin, Ethereum tokens within that space as well. It's also some of the NFTs, which are like digital from the beginning, so it's kind of simple. And then it's stable coins. And we had like a tradition around finance that cash is something we can send around like relatively free compared to a lot of other financial instruments. But from there on, it gets harder. And just a reminder, took 20 years to put music on the internet from Napster to Spotify. So we probably look at something along order of the same time scale here. And this is where we can put like other things from commodities are probably slightly simpler, but then as soon as you move into securities and other things, well, to put securities on the blockchain and not do it in a super over permissible way, you probably need to get to a realm where you consider any security on the blockchain a publicly traded security. And that means anyone can own it. and there's rules and regulations that's pretty clear and open, and transparency becomes key in this motion here. And I do think that that's some of the stages that we'll see over the next 10 years.
It's really interesting to think about where this is going to go, of course, in the context of the types of businesses that you could start under the Chainalysis umbrella, types of products you could launch. And obviously, bear markets are a great time to consolidate other types of businesses. So how do you think about just building, you're sitting there with a war chest over at Chainalysis in a time when a lot of startups are struggling. So what's it like to build in this bear market? And what are you looking at?
So I'm always looking at something that can really grow once we get back to a bear market again, a bull market again, right? Basically, something that scales well, something that builds a moat around things. But also, I think that using our data platform, where we have a lot of data on basically every blockchain and every token out there, and building new products on top of that opens up new verticals. And I would say one of the things that I remember from running an exchange many years ago was that when you were in this time of reflection in a bear market, you started to think about what actually made me get the customers I got, what are actually the good customers to have, and what are less good customers, and what is the journey of a customer on my platform, and starting looking at the business intelligence side of growth and the growth machine within a business. And we are starting to build products around that today, where we basically say, how can we use the data on chain to inform the customer journey, to inform the customer preferences between different services, and understand what customers are doing, not just when they're in your service, but also on other services, and create better products that way. And basically, I would say, supercharge your growth engine. So that's something that I would say is a new very adjacent market to what we see in our traditional customer space today. And then I would say the other piece is again looking at the inherent transparency there, understanding risk in other ways than just someone is doing something criminal. It can also be liquidity risk. What are actually the balances in other businesses? What are the backing of tokens? What's the solidity of a token? Is it liquid? Is it illiquid? How many, if someone is, if I send someone my cryptocurrency, they exchange it for another thing and they still hold it against that one. Well, can they go back to Bitcoin from that, for example, or can they go back to a stable coin from that? Well, for $100, they probably can. But if they owe me now, let's say $1 million, maybe they cannot. And these are concerns that you need to understand to manage your risk, your credit risk with others. And there's a ton of that in crypto, because every time you put money on another service, they kind of owe you the dollars, right? At least they do from a contractual point of view, but it's not yours anymore. It's not your keys, not your money. So that's becomes a credit risk. And there hasn't been a tradition in crypto to manage that risk very well. You saw big businesses just failing to do the simplest thing you can do in risk management, and that's putting your money 2 places or 3 places. It means that you lose a lot, but not all. And that's way better.
There's all these risks that financial institutions probably haven't even thought of yet, but they will need to think about them. I mean, think about being a large financial institution and just sending an outbound Bitcoin transaction. When is it actually going to settle? I mean, the mempool's clogged and it's actually going to 15 minutes instead of 10 minutes. These are things that people actually should be thinking about.
I agree, and I remember building wallet software and sitting inside an exchange many years ago. Again, these were things we would be obsessing about. When should we start send transaction or not? What were the signals on the blockchain to do it or not? And I just didn't know back then that was settlement risk, right? But that's actually what it was, and that's basically how it worked and how you thought about things building wallet software. And I think that that's something that's key for financial institution to manage that well. Because you also don't want to be so conservative that you only send them out once a week, right? Then you're back to the standard financial system. You want to ensure that you have a good operational mode around that and good data around that to understand those kinds of risks.
The other thing that happened at the end of the year, besides FTX, was the launch of ChatGPT really at scale. And so I'd be remiss if I didn't ask you, is there an intersection there? Are we going to see anything at the intersection of public blockchains and artificial intelligence?
Yeah, I kind of always slightly allergic to taking like 3 different buzzwords and then combining them and put something together there. But I'll try anyway, right? So say like in Chainalysis, we always use like machine learning and artificial intelligence to be able to process billions of transactions and create a knowledge graph from that. So that's something that's there. But there's a huge jump from that kind of old school use of artificial intelligence and into like large language models that we look at today when we think about OpenAI and other things there, and say like, hey, you want to be able to do things in that capacity. And I do think the large language model have kind of opened the door to another kind of UI and a way of building UIs into databases, into capabilities, and so on, and basically direct them and use them in another way that's way simpler. So I would say there's a lot of building opportunity around things in the crypto space that makes it far simpler. And we already seen that like it's kind of trivial today to find exploits in smart contracts using artificial intelligence. So there's like an opportunity to make the space harden better and basically make stronger security there. So there are some intersections there. I'm not sure you'll see like a direct intersection between blockchain coupled with AI and do things there. I'm just like slightly skeptical there, but there might be someone that's smarter than me that have good ideas in that space and would enjoy
I
that.
had to ask. I guess the other thing is that there's been so much negativity over the past year in the crypto space, certainly the regulatory backlash post FTX, but at the same time, the building has just really continued, right? The scalability of these networks is really proliferated. You've seen the launch of a lot of these L2 networks on top of Ethereum. So what's getting you excited just from the technology perspective right now in the industry?
So I actually, one of the things that I really always enjoyed also from a technology point of view was the Lightning Network. I think that's super cool and something that's like very impressive. I also enjoy the interaction and intersection between IoT and crypto and see like, for example, how those examples with Helium have played out. Now Helium has moved to another blockchain and we see things there. It's still a very big fraction of like what happens in IoT is actually run on that, which is in itself quite amazing and one of the success of crypto. It's not hyped in the same way as like other things in crypto are, but it's like very, very interesting and very interesting use cases. And I think we'll see far more of that as well.
I certainly think that IoT space is really interesting, and that just the real world application of blockchain technology. People are always asking about what is the breakthrough consumer use case, and maybe it's going to be something in that category.
I think it could be, yes, and yeah, that's super exciting.
Michael, this has been a blast. Where can we send people to learn more about what you're building at Chainalysis?
They can definitely go to our website at www.chainalysis.com. That's a good place. We have a lot of blogs there. There's a lot of fun information there. A lot of reports to read about on Chainalysis and our data there. That's a good place to start.
Awesome. Well, great to see you and keep up the great work.
Thank you so much. Great. Enjoyed chatting with you again.